Morning traders, and this is your Aussie day trade setup for today. So we ended up with a green pin bar. I've got some nonsense data in the chart, so just to show you. So this last bar here is obviously nonsense data. So that was our open, and our close was there. So that's pretty much a green pin bar on the daily. So that gives us a double pin bar off bottom to the bottom, or alternatively just an inside bar. So I'd go with an inside bar, so green body fits inside the red body. And the only concern I've got is, sorry, I'm jumping around between the time frames, but the concern I have at the moment is that we are ranging, or we ranged yesterday in almost 1,500 points. Just say 1,400 points was our range yesterday. So that's pretty a big range, and just for interest sake, the Dow Jones was also ranging in the 1,000-point range yesterday. So I'm still very cautious on this. Everything is indicating oversold, and we should be looking for levels. There aren't many levels to look at the moment. So I think what's going to happen is we're going to probably build structure. So it could still going to be pretty volatile, and we're going to build structure. A break of this current range that we're in will bring us back down to the bottom of the current low from the day before yesterday. So that's kind of, I think, what's going to happen. Right now, markets are down. Futures markets in the US are down around 3% at the moment. But 10 cent is only down 0.5%. But bear in mind that yesterday they rallied 5%. So up 5%, down 3%. I mean, nothing much to read into that right now. For me, it's definitely still a case of sit on hands and wait. Nothing that I can see in the chart at the moment, especially on the Aussie, that's going to get me excited. If we look at the Ichimoku, everything is still bearish. There's no indication that this is finished, except we have a flat Q and Ticus, and they're fairly far apart. But we could be forming a flag here. Okay. So it could be forming a flag for another move down, and that move down would be this leg here. Let's get it correct. Okay, and that would take us all the way down to 31,700. Okay, so if we look at the daily, I think that scenario doesn't look very promising. We do have diversions forming here. We've got oscillators group to the downside, Keaton and Tickerson flat, and we're far away from them. So for me, I think it's a case of just keep your money in your pocket for now. It needs to form a base. And the base is basically the structure that we can trade off. So if we don't have structure, you're not going to be able to trade. And for as long as we're moving inside the moving averages like this on the hour, that's indecision. You want to stay out of it. So you either want to trade a break of this to the downside or a break to the upside. But based on the daily, I would prefer to be trading, looking for the higher low forming on the hour. Okay, and at this stage, we still don't have a higher low. There was a previous low, there's a current low, and we're probably going to get a gap down and find some support here before rallying again. Okay, so in other words, I'm expecting us to form a bit of a range here, and it's going to be a 3,000 point range. Okay, so anyway, guys, message is still the same. Sit on hands, stay safe, and I'll catch you later. Cheers for now.